The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, folks. Welcome. This is the Thursday edition, December the 20th, 2012. And a pleasure to be here Monday, Tuesday, Wednesday, Thursday, and Friday. At this time, 11 o'clock until noon Eastern. And thank you, Steve, for 2 great hours lead-in. And then straight after me comes Larry Pesavento. Larry comes on at noon. And then comes, let's see, so today's Thursday. So we've got Larry, then we've got Daryl Martin, we've got Dave White, Ken Sharif, and then come right back here for Tom O'Brien to wrap it up. Give Tom's thoughts on what's happened. And of course, Larry's hour on Thursdays is called the Futures Hour. So he'll do something a little differently, and he'll be looking at the charts in his usual way, using his different techniques. So thank you for those who turned out yesterday to the meeting, the Boston Investors Group down over at MIT. We had just a fabulous time, huge crowd. And must have been the food, I guess. So great to see all those tigers. And, of course, I told you about TFNN.mobi, and I told you about our services here at TFNN. And hopefully some of you are listening, maybe for the first time, and hopefully some of you are going to be able to call in at 877-927-6648. And the parameters that I was talking about yesterday, and what I mentioned as being very specific, were those parameters on the volatility index. But there are a couple of things that I want to look at right now. You remember last night, and during the shows over the past many weeks now, I've been emphasizing the negativity that I've seen in the gold chart, the GLD, which trades at 1/10 the price of spot gold. And I said that there's a pattern that you can look at, and it's a pattern that I discovered years ago, and we've used very successfully. It's the lowercase h pattern. Let me just briefly show you the chart right here on Tiger TV. Let me go to that. That is the it's chapter 17, I believe. Let me just look. Yeah, chapter 17. It's the lowercase h, and that pattern just is reflected over and over again in so many chart patterns on the way down. On the way up, they're like scallops, they're little cup formations. You remember, we've seen that where the left side, right side price time matches, and it makes a cup formation and breaks out. I call it the ChapmanWave cup and ladle. This on the way down is that failure, that pattern, that lowercase h, the right arm of the H plunges through the left side support. So here are the chart patterns, red H pattern. This is slide 334 out of 476. Remember, this is my CD called Introducing the ChapmanWave Methodology. There are all these different sections, even cartoons. Remember last night I showed that cartoon of, if I could remember it, because it's so appropriate, find cartoon, CARTON, not there. Let me just run through these. Let me just go quickly through them. 1, 2, 3, 4, 5, 6, 7, 8, 9. Oh, I lost it. Whoops. That's not it. This reminds me of the stock market, husband and wife climbing, or whatever they are, climbing the cliff. This is what I had drawn years ago. And as they're getting to the top, he says, this reminds me of the stock market. She says, how come? He says, what goes up must come down. That wasn't the one. I wanted this one right here. There it is. Okay, right. This is the cartoon. I drew this back in the 1980s, where we were going through this whole thing of fiscal responsibility, it just, the themes repeat over and over and over. Well, here's the cartoon. The guy says, on TV, in the background, you can see this was drawn back in the 80s, because look at the TV set. Now, of course, you've got a flat screen. And if the government should begin to act in a fiscally responsible manner, says the newscaster, and guy looks at his wife, there's an exclamation point, and then they dance together, and they dance, and the song is, and if the Rockies may crumble, Gibraltar may tumble. I mean, it never happens to act in a fiscally responsible way. Anyway, so there are a couple of cartoons that I've thrown in. But yeah, this is the CD introducing the ChapmanWave methodology by Basil Chapman, chart analysis in the stock market. All these different chapters, overlapping waves, a right arm extension. But the most important at this particular time have been the arch formation and the cup formation. So the H, the lowercase h pattern, I call the dreaded H, that pattern in a larger form is this arch. Now look at the arch formation. It also has what I call the inside wedge. Now this is the pattern that you want to be looking at. You see the left side, right side price time match? You see how that arches over and comes back to the left side low? Well, look at this. When you go to, I should have shown the cup formation. The cup formation is shown in the Dow as you go from the October candle of the 23rd, and you come all the way down to 12,471. That's the midpoint. That's what I call the plumb line. And you go to the right, and it hit exactly to the day. I mean, how does that work? It works because it's based on human emotion, and human emotion repeats over and over again. And on the 12th of December, it goes to 13,329. Makes the cup and handle formation. I'd already drawn that pink small cup over there to say that the maroon line, the 9-period exponential moving average, is really important. Well, what happens? It goes to a higher high. It goes to 13,365 on the 18th of December, pulls back, and today tested exactly the 9-period exponential moving average. So far, I'm going to draw this in because it's now become clear that at least there's a chance, with all the yays and nays going on politically, that we could get the pattern that I call the ChapmanWave stalk leg. And that says that there should be a breakout above the previous high of 13,365 within the next 3 to 5 sessions. About 3 to 5 sessions. It should spike above 13,365. It could make another leg or two. At some point, it's going to come back into the body. So here's the leg. It's not the ChapmanWave leg A, B. This is the entire thing. It's like one big leg to the upside. Possibility that the body is forming right now with parameters between 12,365 and cannot break below 13,118. If it does that, the pattern's going to fail. But it holds within this. And then suddenly there's this good news, bad news, whatever it is, but there's news that the market loves, and it spikes up. That's a possibility. So I'm putting it in now. For the very first time, I can put it in as a possibility. You break down, and you've got a peak F top in the ChapmanWave and the daily. That's not good. Now, the pattern that I was talking about, this is why I wanted to show it. Look at this. The TLT, the Lehman 20-year, where did it go? The TLT, the Lehman 20-year T-bond fund, did exactly that. You've got your arch formation. Right there's the arch formation. I took out some on my other chart pattern, but I'll put it back in here. There's a left side, right side price time match right there. I'm sorry. The left side, right side price time match. Let me just put LS for left side and RS for right side. And there's the thing I call the ChapmanWave inside wedge. I usually have it in a different color. And I usually make it a dashed line because it's subservient to everything else, but it does become very important because it becomes a target line. So the TLT goes to 119.87 on the 18th of October. It runs to peak A, B, C, D. Let me just quickly define that. From the lowest low bar, it starts a brand new buy signal and it goes 4 peaks higher to D, and then it just, within a couple of bars, it squeaks to an E, and it goes to 127.19. I think it's 19, and then it pulls back, and it comes down, trough A, trough B, trough C, trough D, hits 119.90, 1 day early. But isn't that a nice pattern to learn? Well, these are the patterns that you can look at the monthly one. The monthly one says, we still don't know if this is a peak D or a C at the top here, but look at that beautiful cup formation. So these are the things I talk about. The stochastic at the bottom over here, the MACD, that's all on the CD introduced in ChapmanWave, and I explain how to use these particular techniques. I'm mentioning this because TFN has been kind enough to do two things. One is they're using all the money of the Tiger dollars that they get this holiday season from between $500 to $1,000 or higher to give you back between 5% and 10%. To give you a bonus of 25% right out. Just you pay for a service that costs $500. You'll get 25% extra, $625 or something, right? What happens is 5 to 10% of that becomes a donation to the Salvation Army. I'm so pleased that I don't know how they can do it because they need all the time to be able to get everything together and to be able to send the check over, but they're doing it. So TFNN has been kind enough to extend the Tiger Dollars promotion, a win-win situation, because obviously TFNN derives income from that. Very important to derive income, but you get a tremendous benefit. You make 25% on your investment. You can then choose all the other different different subscribers. You can subscribe to the different services at TFNN. But what's really nice is that part of that goes to Salvation Army, and then you, in your name, you get a tax donation. And who knows, this could be the last year that they're such easy donations to make. So give it a try. That's number one. So that's the win-win situation. The win-win-win situation is that I've got a special. If you go to the front page of TFNN right here, you'll see that it says half off. Save 50% on Basil's CD book. It's really a PowerPoint presentation. You can read it like a book. Don't get all involved that you have to learn this. You read it like a book. The things are going to just jump out. You will remain stuck in your head. You're going to pick it up right away, and then take your time about learning the other things. It's a process. It's a life process. It's not a one-day process. It's not drinking a cup of coffee. So what happens is you get 50% off. It's usually $249, selling it for $124. I decided, because there's so many people that have shown interest in the ChapmanWave methodology, etc., I'm throwing in my monthly service, really comprehensive, incredibly detailed daily service, giving you the parameters for the different indexes, bonds, dollar, Qs, diamonds, Dow, the S&P, everything, every single day, as well as my Trader's Corner. And I really don't want to toot any horns right now, because this is right now is a very difficult time. All 6 of our positions are up on the long side, and even our short side is up. So all 7 positions are up. Hey, that can change in a moment, but the process I went through so carefully. I went through the process with my subscribers, so they knew what we were looking at, why we were looking at it. So I'm throwing in for $128 free. For a month, you can have my daily opening call service. So actually, I lose $4 on the whole deal, and it doesn't matter to me. I couldn't care less. I love the fact that more people are interested. I'm an advocate for the ChapmanWave methodology, really methodologies, because there's so many. Please consider it. This is a great time, and we'll be back at 877-927-6648. Haven't given you the numbers yet. Dow's down 1, S&P's down up 1, and Comp is down 2. I'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and let's go through those numbers a little clearer. The Dow is at 13,249, down 2. The S&P is up 2.5 at 1438. The comp index is down 2 at 3041. What is Apple? Apple is at -3, holding 533. Remember, it was 533 to 534 was a strong resistance at the 9-period moving average. Pop, it hit that, and it pulled back for 2 days now. 3 days if you include the day that it spiked up and hit it. So it's going to be really important that Apple shows the kind of strength that says, yep, I'm ready to have a counter-trend bounce, according to counter-trend, because I believe that the tide has changed in the monthly chart. And a counter-trend rally, and that rally says I could, in fact, if I break above about 535.60 to 536.80, I could start hitting that 539 number. That's going to be really key at this particular point, and needs to do it fairly soon. Otherwise, just another dreaded H pattern. Just keeps going back down. So I had a question, an email question about the XLF. The XLF is the S&P Select Financial Spider Fund. It's been one of the very best ETFs or indexes or sectors for a while now. There's a pattern that I've been talking about that says the cup and handle is not one of my favorite patterns. The cup and handle is a pattern that says when you are looking at the large cup formation, left side to the right side, it makes this beautiful let's call it a semicircle, a vertical semicircle, or it could even be it could be an oval, it could be a circle, but it's the half circle at the bottom. And when it comes around to the other side, it stops, and then it doesn't take out the left side high bar, or if it does, it doesn't do it by much, but it quickly comes back in, and then it makes a smaller little half circle, a cup formation. A very small one takes a certain amount of time. There are different rules, there are different numbers that people look at. Some people want the handle to be in time about a third to less than a third of the full cup duration on the horizontal duration. Others like to see it not break a certain level, one half or maybe 1/3. There are different ways, but it doesn't matter. Whatever way that you look at it, the most important thing about it is that in my reading, looking at enough cup and handles over a period of time, my conjecture here is that the majority of the time they tend to fail above. They do break out, and it's a nice pattern. If you actually identify it in the little ladle turnaround at the bottom, that's fantastic. But it's a high-risk probability. But if you do it, you can get a very nice position on the percentage side to the upside. But what happens is that invariably the handle, it breaks above the left side lip. Let's just say 20 is the position, and 15 is the cup, and now you've made the little ladle, and the ladle only goes from 19.80, it pulls back to 17.50, and then it breaks out and it goes to 21. Very often what happens, most of the time I believe, is that it comes back and it fills the whole handle again. What I love is the cup and ladle, which just slices through. I've done a lot of work now in the handle and the cup. In other words, if you're left-handed, you'd hold the handle in your left hand. That's all it is. And basically what I've done, I've not come to a conclusion. I'll only talk about the conclusion when I've really spent at least another 2 months on enough charts to go through them to be able to make a concise and a very pertinent point about it. At this particular stage, I believe that the handle with the cup, the left-hand handle and the larger cup, breakout represents very much my cup and ladle thesis, except for one thing, that the pullback afterwards, even though it tends to look like it's about to make maybe even an upside down head and shoulders pattern, everything about what I've been looking at is that the price comes back and spends a longer time underneath the left side lip. So now let's look at the XLF. If you're looking at Tiger TV, you'll see this here, this left side. Hope it's not too messy. Right there. That is the daily chart of the XLF. A very important component, because if the financials are doing well, it really helps give some kind of baseline positive aspect to the overall market. Now look at this. From the breakout above this green line, which is 200-period exponential moving average back in August, it goes peak A, B, C, D. It goes to E at 16.44. It pulls back to, let me use the pointer. It pulls back to 15.45 on the 28th of September, and then it goes peak A, B, C, goes to another D, but underneath the 16.44 high at 16.39. That's a pattern in my CD. If you get the CD, you'll learn how to look for double tops. You go to the double top formation, and as we go to the break, we'll be looking at the chapter 22, and you'll see right here the double top formation. And that double top formation says, be careful. You could pull back quite sharply. We'll be right back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
20 S&P's down 0.60. And just let me finish this quickly, and we go to our callers here. Excuse me. The XLF 120-minute chart is just making peak D if there's no new high bar above 16.64 in this particular bar. Stochastic is at 82%. That's good. The MACD is still very strong. The support that has to hold if the XLF takes out 16.36, I would say 16.30, closes under that for more than two 120-minute bars, there's a possibility of an arch formation. That's number one. Number two, so far it's holding very well. The daily chart has the handle on the left side, went to 16.39, went all the way down to 15.08, exactly on the 200-period exponential moving average, this green line right here. Rallied above the 9-period moving average, has gone to peak A, B, C, D. There could be, in fact, an instant restart, but at this point I'm calling it E. I'm calling this F/B, the new high that was made. Got a Fibonacci extension. I just moved it by mistake. Fibonacci extension, which says somewhere around between 16.54 is a 161.8 extension. The ones that I love are over 200, preferably 260%. That's where you're really getting overbought. At this particular point, The MACD's good. Stochastics at 91%. I like the action in the financials. 16.29 is the 9-period moving average. Weekly chart is in leg E. I'm calling this for now. Leg E up, very strong. The technicals haven't quite confirmed it, but it's the first time it's above the 200-period moving average in the weekly for ages. That tells me it's going to try to test the 1680 to the 17.30 area over the coming couple of weeks. And then in the weekly chart, 1596 to 1480 is going to be really important support. So far, leg E is acting well. And the monthly, I'm calling this leg C, but if it goes above 1720, I'll call it leg C/E. Everything about the financials so far is positive. It breaks down if it starts taking out 1560 to 1550. Let's go to our first caller. We have got Thomas in Lakeland. Hi, Thomas. How are you?
Hi, Basil. Merry Christmas to you and your family.
Same to you.
Thanks for everything you do. We invested in your CD back some time ago, and we thank you. There's an awful lot there.
Whoa! I didn't like that terminology. There is a lot there. I don't want to hear that it's an awful lot.
No, I mean that in the best of ways.
I know. I'm just joking.
You get years and years of work in there.
There is a lot of years of work, yes. Well, thank you so much for doing that. If you have any questions, just always send me an email, just any question you have about it, and I do appreciate it. Thank you so much.
Thank you.
Is this your first time? Is this your first time calling?
It's been a while.
I remembered you calling it once before. I mean, at least once before from Lakeland. I thought I remembered you. Anyway, thank you so much for calling. What is your question?
Yeah, two questions. Both on your technical and your system, and then also on the stock is iSurge. But the first one is on the system. We do use TradeStation. Do you have a peak counter that you might lease or sell as far as an automated indicator consistent with or compatible with TradeStation?
I do. I have one, and it's extremely reliable, and it's talking to you right now. I'm it.
Okay.
So there's thousands and thousands of charts, and when I grumble that I've lost my charts because when I get shut down by accident, it didn't happen to me before, but for about 3-4 years, I lose the letters. They are there somewhere. I know that they're there, but it brings up an older file that picks up the letters. So if I go to my black charts right now, I know how many times I did. What's the Weatherford? This is WFD. Let's just see if that comes up. Yeah, I know how many times I've done these different charts. Westfield Financial, and they're not there. They're there somewhere, and maybe this weekend, for the first time, I'll have a chance to find out where they are. But on the white background chart, so far it's been perfect. So the answer is no. There isn't yet. I'm hoping in the future. I'm hoping in 2013. I'm going to take a lot of time to work on the software part of it. If it's part, I know the easy part is getting to peak ABC. It's after that in computer language, when you set up a set of parameters and you make one adjustment to form fit something, all of a sudden you've created problems that a human eye in a split second would say, "What problem?" And a computer says, "Huh? Yeah. What are you doing?" Why? So that's the issue. Yeah. So
okay. Now, thank you. So you must do that manually then when you count
every one of the tens of thousands of charts that I've done. Yep. Amazing. And it doesn't take long. When someone calls me up and I haven't got the chart done, I could spend just the commercial break and I'm finished the daily, monthly, weekly, going back for ages.
The stock I wanted to ask you about, and it's both the stock and then also the position, is Intuitive Surgical, ISRG. And I'll share with you, I'm fortunate, I had purchased a 535 put back a couple of weeks ago, and it's for January 19th, and I paid 13 points for it. And so my question, I wanted to get your thoughts on the chart itself, and then having the put, how you would play it from here. I'm tempted to not be too greedy and maybe sell a put, creating a put spread, and take it to the end of January. Earnings not until February, or maybe you would have another approach or another idea.
Is it one put, or you have a few?
Just one. Just one.
You have one. All right.
One.
First of all, congratulations. You did what I kept. You did what I've been wanting to do for ages, and that is to show. I've done it before at different times, but this time I felt convinced that Intuitive Surgical had made an historic, because it's just been an unbelievable stock, folks. ISRG is the symbol. It's down 14 points at 500.74, and you can tell that if Thomas has a put, the 535 put, and it's trading at 500, regardless of what the premium was when he bought it, he has moved virtually, this is one of the few times you can say it, almost exactly point for point to the downside, correct? In today's move.
Yeah,
towards
that's right.
Towards the middle of yesterday, once it broke 520, and immediately going into the close and today at 500.74. This is what I'm going to recommend to you. First of all, that kind of a win, you just have to take it from me as the highest degree of compliment for getting into the position. And it did go against you for about a day or two, but you stuck in and you held with it, and then it looked fantastic. So I'm going to congratulate you, first of all, for your eye. I'm going to ask you a question. If you want to answer it, fine. If you don't want to answer it, you don't have to answer it. Why did you do what you did at the particular time that you did?
Well, I'm usually all technical, but in this case, I did apply some fundamental, and I happen to know that business. I never worked for them, but the fundamental part of it came into view. One, I thought their earnings were just okay, but they're going to face. They're an excellent company. They have excellent technology. But with the Obamacare, they're going to face the medical device tax, which is going to be huge for them. They are going to also face, they have done a great job of getting, the equipment is very, very expensive. They've gotten a great job of getting the units into the hospital. Now they have to go for what they call procedure adoption, and I think they're going to have a huge problem there. It's kind of like killing a mosquito with a howitzer. The equipment is awesome for like prostate surgery, real complicated surgery, but the smaller surgery is going to be a real challenge in the face of Obamacare because so that was in part, and I've been watching and watching. I watched it around the last earnings, and I've made a couple of forays, before on the last earnings, but this is when she did it and she bounced up into that resistance. Technically, I said, you know what, this is my shot. So
great. Well, I love that. That's fabulous, because the irony is that I gave someone a ride from the airport the other day, back from the airport. They were coming up from Washington. And it just worked out right at that moment. I had a cancellation for some appointment that someone was supposed to meet me. And I said, you know what? I let them know right away, I can pick you up at the airport. Good friends. So I zipped down, and this person has the diametrically opposite company. Intuitive Surgical has $1 million plus equipment that each hospital has to buy. They spent an incredible amount of money getting there. Folks, for surgeons to move from one procedure to the next, it takes years, decades sometimes, for it to become entrenched, and they've managed to do that. But the expense is tremendous. Well, this friend of mine has started part of a company, started about 2 years ago. The exact opposite. They do not use any of the electronics. They use it by hand, but they have developed a way of manipulating like fingers, whereas before the pincers, the points themselves were kind of fixed. Here you can turn them around. You can do all sorts of things. He's having a very difficult time trying to market it. They had a lot of interest in all that. It is tough, and well,
that was my business for almost 30 years, so I know it very, very well.
Okay, so this is in direct competition, but it's back to riding a bicycle instead of getting a motorbike, and it works fantastically. Except no hospital is going to say, we've got $1 million thing. What do we want your $350 instrument for? Even though it's fantastic, it'll save us a fortune. So anyway, I know exactly what you're talking about. So here, number one, let's go back. I'm pleased you told me about that, because I've been looking at the stock and I'm saying there's something wrong. There's something wrong. This is going to fail if that monthly chart makes the pattern called the dreaded H, which you know very well. So here we are. Right. It makes a high of folks, Intuitive Surgical makes a high of 594, April of 2012. It pulls back under the 9-period moving average. It's just been a spectacular stock. It goes from the low in March of 2009 from 84. That's a fantastic move. 594. Everybody keeps talking about Apple, but this has been the Apple of the whole medical field. And what happened is it pulled back to the 50-period moving average. It's in a beautiful up channel. It goes down to 467, and then it rallies to 551.93. Pulls back to 551.15. It makes peak A, gray peak A, and then it goes to 553.96. Meanwhile, the weekly chart has a pattern. I spent a lot of time last night talking about the GLD weekly chart and monthly chart as well. This is the same pattern. It's the dreaded H that goes into an M formation, and if it falls and breaks down and goes under the major low of 467, which was the low of July of this year, this thing, I have a target for this. If it continues to fail to hold support, the 200-period moving average is really the target, but the first most important one will be 429.26. Now let's go back to what you have. If you were short, I would say congratulations. Now keep your core position, and you want to add to it on a bounce anywhere between 519 to 527. You want to add to your short position, but you don't. You have a put. The gain that you've got for anyone who's you've obviously traded options before. We all know that in the options market, when you have a spectacular gain, if you don't, the best is to be able to have a couple of positions so you can immediately take off this and say, fantastic, it paid for everything. Anything else is a bonus, but you have one. This is what I'm going to suggest to you. I'm going to suggest it's going to be real tough to do because I think you're absolutely in the right position, but you're looking at it. This is like buying a $75,000 vehicle, signing the check, and as you drive out the showroom, it's already lost its premium. And that's exactly what's going to happen with your put. So I'm going to make the recommendation. If you take your gain right now, and then out of the gain that you have, take a portion of it, a half of whatever it is, or you could take the full gain and keep just your core position and say, okay, I'm not going to play with my core, the amount that I paid, $70 or $700, whatever it is. I'm going to use just the gain, and out of the gain, 1/3, 2/3, or half, I don't care, is going to be dedicated to getting back that put, but in a very judicious way. You might miss it because it's already the third day of this big red candle, but I suspect that it's going to have a bounce, and that bounce is going to find tremendous resistance between, I wouldn't be surprised if it's between 512, maybe 515, somewhere between there and about 520 to 522. Because it happened so quickly that the people who already wanted to short didn't get a chance. My suspicion is they're going to try to bump this up so they get a second chance to short. Now, that's what I personally would do. You can think about it because you're in the right position. The other way to do it is to say, look, I'm in it. I've got a fantastic premium. I'm going to keep it as if I was short, but you know that the risk there is your premium is going to shrink tremendously. My gut feeling is just get your profits, get back in another time. And I have to congratulate you. Fantastic move, and thank you so much. And thank you for having my CD.
Thanks.
Thank you very much. And that was Thomas in Lakeland, and we're looking at ISRG, fabulous percentage gain. I compliment you. I'll be right back. Basil Chapman, Dow's down to 1. Be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. I just want to continue with an ISRG, Intuitive Surgical chart, the 120-minute chart. I had done work on this ages, just continuously, but for some reason, it just went off my radar, and it was even a little bit of a surprise to me to see it come down so quickly, because it was on my list as one of the stocks that I wanted to short. But if you look at the 120-minute chart, it made a peak G back in on the 22nd of October at 4 o'clock at 551.93. Then it pulls back sharply. Then it had a sudden spike. Held the 200-period moving average in the 120-minute chart, went to 549 with a round number open of 540, and then it plunged back to the 200-period moving average. Then it broke down. It went above it. What confused me at the time, why it was off my list just for a couple of days, is I was waiting to see how the rally went back to the previous high. And that's exactly what Thomas was looking at. That 551.93 high back on the 22nd of October, because I wanted to see how it dealt with it. But it dealt with it so quickly that I missed it. And I missed it not because I'm not sure I would have done anything there because I would have had to wait. But as it was pulling back, I would have said, aha, this might be the opportunity, especially with the peak D possible in the 120-minute chart, in the weekly chart. So great eye. He did it just exactly as I should have done it. I didn't do it, but I'm looking at the chart, and I have to tell you, the 120-minute chart says it's starting to fill the gap, and that was an important gap from the October the 12th high of 500.65 to the 15th. There's a beautiful gap there. 505 was the low. So this gap has just been filled. So it's in the area where it could try to bounce, but with an option, getting that premium is just fantastic, and getting that gain is just terrific. So, congratulations. Now, I need to just do a couple of things. I was asked just to quickly in a few minutes, because I know that Larry will be going through in the futures hour a bunch of some of the very important charts. So let me go through the ones that I think for me right now important. The IWM. That's the Russell 2000 has made a peak D in the 120-minute chart. It's made a peak D in the daily chart, but the technicals are still very strong at 87% in the stochastic, and the MACD is very good. And the weekly chart has broken out and is holding very nicely. When I try to put this whole package together, and I'll include the NYA just for the moment because we're about to run out of time, what I look at. What I'm looking at is that it's made a peak D at the resistance level in the cup formation, the left side, right side. Folks, remember my CD introducing the ChapmanWave methodology on sale at half the price. What are the patterns you want to look for? Cup symmetry. Look at this cup symmetry right here. That, with the channels, how to use the channels, how to use that cup. Look, we've got it right here. There it is. There's the channel. Let me put the other one in. That's the inside. That's the inside wedge, which often gives you your channel. There's the other channel. If the New York Stock Exchange breaks under, it's at 84.74, up 9. If it breaks underneath 8,400, let's call it 83.90, closes under that, it says, be careful. The daily says double top formation, a triple top actually, could be pulling back. The weekly chart says, it might be leg E/A because it's gone to a new recovery high, 85. Yep, it's gone to a new recovery high already. It hasn't closed there. But until you get signs of negativity, you've got to say, this is pretty darn good action. The monthly chart is in leg C up, trying to tackle the 87.18 level. So I look at this and I say, keep it simple. I'm going to wrap it up by saying, if the volatility index, the VIX, it's in leg C. If the volatility index goes into the 20s, tighten your stops, look at your shorts, and the market will be dropping, and it will be dropping quite sharply if it's sustained. As long as it's in the teens, that's buying pressure. That's what I'm watching very, very closely. Thanks for being here. Stay tuned for Larry. Stay tuned for all the shows. And thanks for being here. I'll be back tomorrow. Basil Chapman signing off. Don't forget, go to the front page.